This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, January 26, 2016. Euro dollar. So despite a bit of a bounce in Monday trade in the euro back above 108, it's clear here that the overall pressure remains to the downside while the market holds below what seems to be a potential lower top at 110.60. Look for a break below 107.11 to strengthen this outlook and expose a retest of the December base at 105.21 further down. At this point, only really a break back above 110.60 would compromise the bearish outlook in the euro. Sterling dollar. So cable has seen a bit of a bounce off recent lows at 140.80. Those are the lowest levels that were seen since March 2009, but the market has since pulled back a little bit into Tuesday. However, given the oversold technical studies at this point, there is risk for additional upside and correction before the market establishes any meaningful setbacks below the critical psychological barrier at 140. At this point, look for a break back above recent highs that we saw at 143.63 on last Friday, to open the door for additional corrective upside, potentially back towards the 145 to 147 area. Inability to take out 143.63 would, however, keep the pressure on the downside and suggest this market could see additional declines below 140.80. But again, given the oversold technical readings on this chart, there is risk for additional upside here, or more compelling upside than any meaningful downside, to allow for this market to unwind from some oversold studies. Dollar yen. So dollar yen saw a little bit of a bounce in recent trade back above 118, with the rally extending up as high as 118.88 ahead of the latest minor pullback. There's risk for a bit of additional correction in this market, though overall, while the market holds below 20.65, the pressure remains on the downside, and there's scope for additional weakness below last week's critical lows at 115.97. Euro Swiss. So Euro Swiss continues to grind higher and now is closing in on a retest of that critical September peak at 110.50. Look for a break above 110.50 to open the door for the next major upside extension in this market towards the 115 area further up. At this point, any setback should be very well supported into the 108 area, while ultimately only below 107.15 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie saw a little bit of a rebound in recent trade, though the market has come back under pressure after gains stalled out ahead of 7,100. Overall, the downside pressure remains intact in this market, and there is risk for deeper setbacks below the recent multi-year lows at 68.27. A break below 68.27 would expose deeper setbacks towards those 2008-2009 lows that came in around the 60 handle. Any rallies, again, should be very well capped towards the 71-72 area, while only back above 73.85 would take the pressure off the downside in Aussie dollar. Dollar CAD. So dollar CAD has done a good job of correcting off those recent highs that we saw, the near 13-year highs at 146.90, with the market pulling back towards 140 thus far. There is risk, however, for additional unwinding of overbought studies, and we could see deeper setbacks towards the 140 area or even the 138 to 140 area before the market is ready to resume its uptrend. But a higher low is now sought out somewhere above 138 in favor of the next major upside extension back above 146.90 and towards psychological barriers at 150 further up. Kiwi dollar. So Kiwi gains have been well capped into rallies, and this market continues to trade within a broader downtrend. Look for a break below 63.47, that's recent support from last week, to open the door for an acceleration of declines back towards the lows from 2015, which were multi-year lows, the lowest level since 2009 at 61.30. At this point, only back above recent highs, which came in at 65.60 about, would take the immediate pressure off the downside. SPX 500. So the S&P 500 continues to show signs of the formation of a major top after the market broke down below 2,000 and took out the previous August 2015 base at 1834. The market has extended to 1811 thus far before this latest minor reversal. But again, any rally should be very well capped while the market holds it below previous support now turn resistance at 1993 in favor of the next major downside extension below 1811 and towards the 1700 area further down. Gold. So a big development for gold over the past 24 hours, with the market taking out critical resistance at 11.12 and now opening the door, also confirming a fresh higher low at 10.70, and now opening the door for the next major upside extension, which should take us back towards that critical high that we saw going back to October of 2015 at 11.92. At this point, any setback should be very well supported, with only a break back below 10.70 to take the immediate pressure off the top side.